In July 2017, the federal government announced dramatic changes to the taxation of private corporations. They opened up those changes for a commentary period, which ended in early October, and they received over 21,000 submissions on changes that needed to be made to their proposals. This October, we saw an announcement of various changes to those proposals, but also an announcement that the small business corporate tax rate would be dropping. That's the rate that a business pays on the first $500,000 of active business income. That rate is 10.5% for 2017, and it will drop to 10% for 2018 and further to 9% for 2019. One of the proposals announced over the summer was a crackdown on something called income sprinkling. What income sprinkling is when a corporation pays dividends to various family members to reduce the overall tax paid on those dividends. For example, if a business has two shareholders, husband and wife, and they're currently paying each other $35,000 of non-eligible dividends, if they have no other income, they'd pay basically no tax at all in a province like Ontario. If, on the other hand, under the new regime in 2018, if $35,000 of dividends was paid to the wife, and the wife wasn't actively involved in the business, she'd face tax at the highest rate of 45%, which is about $16,000 more than the previous year. The other significant change was to retained earnings in a corporation. When a corporation earns income and pays the corporate tax, it has retained earnings, which can either be reinvested in the business or invested in a portfolio of securities. The government is concerned that by leaving the money in the company and investing in a portfolio of securities, you'd have a bigger pool than you otherwise would have been able to if you had earned the money personally. To discourage people from doing that, they're putting a limit of $50,000 a year of income for income retained in that corporation. In other words, a business owner could earn up to $50,000 of passive income in the corporation without falling afoul of these new rules. So we have dramatic changes to the taxation of private companies, some of them good, lowering of the tax rate, others more complicated in terms of the effect on your own pocket. To really understand how these business proposals affect your business, be sure to get professional advice as soon as possible.